market shifts impacts how I look at my wallet? Maybe yes, maybe no. So those are very important questions each investor has to really kind of ask themselves. And how much is that money? How can I say this? How much are you investing versus your yearly earnings? You know what I mean? Sometimes we put more than, I'm not saying we should, but we're putting a lot, so that creates a bigger emotional attachment to it. So we are more nervous when things have a swing to the wrong side. So there's a lot of variables to take into consideration.
That's there is a great historical example. I think he was a German, and he was the man who became the richest man in Germany during the Weimar Republic, and he was basically selling German marks against gold. And if you look at the charts of the currency against gold during those times, it was a 3 4 years period, I guess. The rings were absolutely something that was never seen in the history of mankind. And but this guy, he did it. He just decided to commit himself to this undertake, and he started to sell German marks for gold. He held it, and he became the richest man in Germany in a period where everyone were getting wrecked, essentially.
The
Surely you cannot
historical Michael
stare at that
Saylor.
chart every single minute of the day. Oh yeah, even Michael Saylor, okay?
Yeah, I'm just saying that's like the historical Michael Saylor, right?
Oh, in that sense,
Yeah, in
it
that
could,
in that
could
sense,
be
yeah,
a good analogy.
yeah,
Yeah, because I guess it's like Roman said: if you have a 10-year horizon, you cannot expect to wake up every single day and watching the charts to see where it's going. Maybe
yeah.
you should watch it like once a month.
I
Something like
think
that.
I think the other thing though is that maybe you don't want to focus on charts when you're managing your portfolio. Um,
Yeah,
and I
that's
know that sounds crazy
that's
to
very
say
very good
to
point.
a trader, but you know we're trading, right? So we already have active trades. We don't need our portfolio to reflect those trades. Um,
100%.
you want your portfolio to be different than that, and in that sense, that your portfolio is a hedge against, and it's a different type of vehicle than your trading account. And like you said, it's kind of because it's you have a longer term time horizon, right? So you know if you think about Bitcoin and kind of the reason I keep mentioning Bitcoin is because that's one that we've all kind of hashed out the macro idea on that and the long term idea on that. And so if you're building a portfolio for Bitcoin long term, like if you're an institution planning 30 years, it really doesn't matter what the chart's saying, right?
Yeah.
It just doesn't, you know?
Exactly. So you're more looking for opportunities to buy than to sell, and that's how the angle should be. You know what I mean? As a trader, you're always looking at both sides of the spectrum. When can I sell? When can I take profit? But when you're for the long haul, you're more concerned on when do I buy? Because eventually you're not going to sell. You're basically going to take a loan based on the equity you own, and that's
Well,
how
if
you're
you,
going to basically manage your.
yeah, so if you're creating a portfolio, you're basing it off the like fundamental aspects of the financial system that are different from the charts, right? So one thing is that the way that the financial system is set up, right? You have this inflationary environment where people are forced to purchase assets, then and then if they sell those assets, they have to pay taxes not just on the assets appreciation itself, but also the inflation, right? So you have to pay taxes on inflation, which is crazy if you think about it. So it creates an environment where people are forced to hold for long periods of time because of the nature of the environment, and that's
Uh, I understand what you mean, but I'm not sure if the right word is forced because reason why I say this is I think there's a like when you look at options, when you look at futures, a lot of these tools were created for you to hedge your main position. And I don't know how credible these people are, on Twitter, but I know some people that they never ever sell their spot position. All they do is they hedge, and whenever they profit from the hedge, all they do is add on to their long position, and that's basically their trading.
I mean,
Well, you just explained what I was talking about. I mean,
yeah,
you literally just said what
exactly.
I said. Yeah, people they have these
Oh,
like
sorry.
they have these you know they have these underlying spot positions that they never sell, right? Because for tax reasons. And yeah, they hedge it at times depending on market conditions, but the idea is to build those underlying assets that they're never going to sell, right? They're just going
Yes,
to
yes, I misunderstood. I
they're
apologize.
going to as you know just keep increasing that the volume of those assets, and then if you know then they can use it as collateral to lend, you know,
There you go.
and get credit, and then use that and spend that credit. So
Yeah, that's how. That basically that's how the richer and the richest stay and become more rich. You know.
Absolutely, absolutely, I agree.
I agree. Hello. Again.
yeah, so if you're thinking about like, okay, well, I think the best way to create a portfolio is to think 30 years out, right? And the way you want to create a portfolio is think, maybe an exercise you could do is say, all right, you know, maybe you just have like a newborn baby, right? And you think, well, how do I set up a fund that's going to take care of him when he's an adult, right? And so, or maybe even a grandson. You know, you're thinking about your grandson who's not going to be born for 20 years, right? And then if you construct a portfolio with that in mind, then you're naturally going to have better allocations and better assets in that portfolio. It's going to be more pristine.
Yes, but again, we also have to take into equation like, are you a father, you have kids, or are you early 30s where you can take more risk? Where if you fuck up your portfolio, well, you don't have that many obligations where you kind of, where you can just take on more risks. So I think that's also something that should take into consideration. I don't have kids, and that's why I permit myself to be a little bit more on the frisky side, if I may.
Well, uh, so when you're defining something as extremely risky, do you mean like what are you thinking of? Are you thinking of like because
Binary options.
it yeah it opens another question. So it you're opening a can of worms, which is like what is the assets that are considered risky over if your time horizon is 30 years are actually the safest, and then if the assets that are supposedly safe on a timeline of 30 years are actually the riskiest. So it's you know it's kind of
I don't know. I understand. I understand what you're trying to say. How can I say this? If I was to invest all of my money, and you know what I mean, and I had a family and so forth and so forth, and I don't think I would have been 100% crypto. Like I only own crypto. I don't own anything else.
Would you go real estate, precious metals, something like that?
No, I own real estate, but that's not an investment. I live in my real estate, so I don't have real estate as a pure investment. Let's say.
No, no. I
Uh,
was talking about building up a portfolio assets. You know.
yes, exactly. Maybe exactly real estate, maybe gold, maybe like even just like spy. Own some spy, own some FANG stocks. Uh, Something again safer to a certain extent, or not maybe safer, just less volatile.
but again you're kind of tying into sort of the can of worms you opened up is like over 30 years is are fang stocks actually less risky than bitcoin? I,
Yes,
are they? I mean,
What?
yes,
Facebook
yes.
could not
What?
exist in
I
you
didn't.
know
I didn't get the question.
companies can go out of business, right? They can, and they do go out of business. A lot of companies that were in the S&P 500, you know, 30 years ago, they don't exist. They're not there. So, um,
Just buy the
Google,
ETF. Be in the secure.
Google. Amazon, they are so embedded into every single thing. Like, imagine if Microsoft goes bankrupt, nobody has an OS. Like,
Yeah, well, that
all
is
of
true. That's true now. But even if you look back at the first industrial revolution, there were companies because, and they thought they would have lasted forever because back then the entire industrial system was
Yeah,
based on
it's
coal.
it's actually extremely
So
common. Like if you think of Sears, right? Sears was the most dominant retail store ever in the history of the world, and now they don't exist.
yeah,
Um, and the
no,
reason
it's fair.
there's a reason
just
for that actually, like a structural reason for that, and the reason is because when companies get that dominant, there's an incentive for them to circle the wagons, so to speak, and double down on the existing business line that brought them to that success, which
uh,
is it ends up being a situation where the more time that passes, the less relevant they become because they're doubling down on something that is getting more and more irrelevant with the passing of time.
I
you
think
need.
Alphabet owns 160 corporations. Like, to not none, and I'm not even over exaggerating.
Oh, well, that is true, but you need to think about technologies which are not even here, and we're not even imagining. Think about Blockbuster. What was Blockbuster? And then we now we have fiber, uh, faster internet lines, and then here comes Netflix. Blockbuster goes out of business.
No, I completely agree. Those are very fair points. But again, you have these Google, Amazon, Microsoft. I mean, they're richer than nation states. You know what I mean? Like, we have never seen such colossal corporations. Like, these are the winningest corporations historically by a landslide. Like, we have never seen such, I don't want to use the word power, but we have not seen such dominance. Like, Google owns all of your data, all of the government's data, all of the corporations' data. Like, they own the most
Yeah,
sophisticated AI.
but Roman,
The
the thing is,
And
like, if we went back to the 1900s, people would be saying the same thing you're saying about companies that don't exist. You know what I mean? Like they, like they, like they no
you said
longer
it was like
exist.
steel, something like that.
Yeah.
fail.
So I'm,
Could
But I
be
mean,
again, but
you're talking about Google like it cannot. I mean, it's a leviathan that cannot be defeated. Yet at the same time, you are in the crypto space, which is all about decentralization. What kind of effect if something like that really kicks on? You know, it's basically the progress of decentralization against Google, which is the king of centralization. So I
Mm,
mean,
no, no,
it's
that's
Google's
I
not really centralized. Google's heavily decentralized. If you look at it, if you look at the actual structure of it, because I work with Google every day because I do DevOps and stuff. You'll find it's splattered everywhere. You wouldn't be able to take down Google, not open how.
yeah.
It's
the
If
business
if
that's
you're
model or the technology, you mean?
it's decentralized in a different way. It's infiltrated through every fiber of your being. So,
yes,
so all
exactly.
your so if you use Google as a search engine, I mean, I use it, but I use it through DuckDuckGo, and I use it through DuckDuckGo for a very specific reason. I don't mind being tracked. It's not a paranoia thing. The reason being tracked is annoying is because what Google and Facebook, those two companies in particular, I think, what they've started doing is they've started actually tailoring your searches to what you get. So what you end up doing is they're taking your time by making your searches inefficient for what you may be looking at. I get very different searches with DuckDuckGo than I do with Google. Yet DuckDuckGo uses Google. The only difference is I'm using Google as if I've never been there before, so they're not targeting my echo chamber, which is what I don't want to see my echo chamber. I know exactly what's in it. I mean, I know what I believe. I don't need someone to validate that.
Yeah, I get your point. And that there is the old, talking about people which are basically paying to be on the top of the list when you search something out. So
Exactly.
so
When
I
I
I
noticed it
think
about
guys,
10 years ago when I was doing my
just to kind of tie back into what we were talking about portfolio management. I think some of the some of the problems that equities have is also related to the problems that the fiat system has. So pretty much every company is valuated from an investment standpoint, an institutional investment standpoint, based on discounted cash flow models, which is
Yeah.
a complicated thing, but you could do a whole video series on that. But basically, it if the discounted cash flow model is based on a currency that is has no stable value, then it challenges the whole prospective future growth of the company and the value of the
Well,
share.
but if you think about equities, basically they are priced in something which is losing purchasing power over
Exactly,
time. So
exactly.
naturally they're going to go up in value. There's no other way around it.
Yeah, well, but that's separate from the cash flow model, which is like their
Yeah,
operating expense budget, and because companies also have to buy base materials in fiat currency, and then
that
their
is true.
their cash flow, and so you get a system where the future cash flows starts getting squeezed, right, as the currency gets debased. So it's kind of
Yeah,
like
because
it's a macro headwind against equities, right?
they're gonna have to pay more for what represents costs
Ex-
on their balance sheet.
exactly. I That's the reason why I don't own any equities. I've never bought a stock in my life.
No, me
Um,
neither.
I just it
You know,
there's so many
for better
macro
or worse.
head. Yeah. Sorry. Go ahead.
No, I mean, me neither. Never bought an equity for better or worse. So maybe I lost some opportunities, but
Yeah. I mean, you have to think with like there's like the AI revolution kind of around the corner, and there will be um, companies that are probably the best investments will be whatever companies lead that or that artificial intelligence revolution and sell those products and start automating everything. So to tying back into what Roman
yeah,
said, I mean that might be Google. I mean Google is positioned to be that person, but it doesn't have to be them. It could be somebody that doesn't exist right now. And
absolutely. Yeah,
sorry, what's up?
I said Skynet.
Yeah,
Skynet.
yeah, man. Um, so I think kind of where I would want to get into the equities market is kind of after the fiat situation has resolved itself in whatever way that is. And then it would kind of be on the tail end of, you'd kind of be, if you think of technology as an exponential curve, right? Whenever that happens, that'll start going a little more parabolic and it might be an ideal time to invest in equities.
Oh no, well, I've been basically telling it for well over a year now that I'm not really interested in equities, especially because I'm expecting a massive crash in equities. So which is not ironically that it has nothing to do with equities for themselves. It's all based on the monetary system. But
Well,
again,
you have a
that's
situation
why
where the equities market is not, it's being treated as a store of value. So like,
it's ludicrous, right?
yeah, so people aren't investing like people like Michael Saylor says that the best measure of inflation is the SPY index, and that's a real measure of inflation. I tend to believe him. You know, people are investing in SPY as a way to protect their capital from inflation. But
Yeah, it's the same thing we were discussing like 5 minutes
yeah,
ago. You mentioned the money flow, the cash flow. I mentioned the basing of the currency on which those equities are priced in. So I guess
yeah. So
those are
in
two
that
points.
sense, in that sense, it is a bubble, right? Because there's all this capital
Like a
infused in,
permanent
there's
bubble,
trillions of dollars infused in there that have no interest in the company, don't even know what the company is.
not to mention buybacks.
Yeah. Um, so yeah, it's just it's one of those things where it's like Bitcoin is the most compelling argument